though leisure and hospitality sector did see growth. And speaking of hospitality growth, one name that's been on a tear lately is restaurant chain Cava. Just a year after going public, shares are up more than 300%. Joining us now in an exclusive interview is Cava co-founder and CEO Brett Schulman. Brett, welcome to Overtime. It's great to have you.
Morgan, thanks for having me.
I do want to start right there because just a couple of weeks ago, I was speaking to the chief executive of a restaurant chain who said to me, hey, look, we see better balance in the jobs market. We can get not only the workers we need, but the workers we want now. And given what we saw with jobless claims this morning, ADP, as we do have these conversations about things getting more in balance or normalizing with the labor market, are you finding the same experience?
We are, Morgan, and we've seen this over the last couple of years where each month we've seen the labor market loosen up and the ability to attract and retain talent get better and better. And so our turnover rates have continued to go down, and we've obviously had a lot of growth over the past couple of years, and we've been able to staff those restaurants and staff them with highly qualified candidates as we've increased wages over those last few years pretty significantly. And even in the past year, we've made further investments in labor, so 8% year over year, which allows us not only to attract new team members, but attract highly qualified, talented team members.
So, of course, I'm going to ask you the question we ask everybody who comes on with a consumer-facing company, and that is, at a time where we're seeing this bifurcation between folks that have a little more money in their wallets and those that are maybe at the lower end of the income spectrum, what are you seeing in consumer behavior?
Yeah, we talked about this on our last earnings call, that we're seeing strength across all income segments. And I think it really goes to our value proposition. And I've heard a lot of talk about the value wars in fast food, but we really think about value a little bit differently. You know, we think about there's price, which is the cost, but then there's value, that's the worth of something. And we think about value in terms of a number of factors when you think about the quality of the food, the relevance of the cuisine, our differentiated Mediterranean cuisine where taste and health unite, the convenience and how you're able to access that cuisine, and then the experience that you have with us when you engage with us as a brand, and that Mediterranean hospitality we're able to deliver. And that's created compelling value proposition for consumers, whether they're at the high end or the low end of the income strata. And then when you look at the price increases that have happened below us in traditional QSR fast food, if you take the end of 2019 to the end of 2023, we raised prices about 12% during that time period. CPI grew at about 18%. And according to the Labor Department, fast food grew at upwards of 30%. So our relative value proposition has only been enhanced with those price changes.
Hey, Brett, I'm really curious about your expansion, right? Part of what makes Cava special is that you're a pretty young company. You're in about 25 states, I believe, right now, about half the country, growing fast. And a month ago, your CFO was talking about how new restaurants are performing better out of the gate in the first 2 years than even your model expects. But then what do you do when you're entering into whatever period we are right now where broadly the consumer seems to be under pressure? Do you put your foot on the accelerator and open more stores more quickly because they're outperforming right now? Or do you look at certain signals in the economy to moderate that?
John, we stay steadfast on what we've been doing over the course of our journey and stay focused on our long-term strategy. And not only our expansion strategy, but reinvesting in our team members. I talked about the 8% year over year wage increase, and reinvesting in our guests. Talk about, how we've tried to mitigate price increases. And in fact, you look at an example like in California, the legislation, AB 1228, that increased minimum wage there. We were the only limited service restaurant company that did not increase incremental costs as a result of AB 1228. So that's our way of reinvesting in our guests. And so we believe that when we reinvest in our team members, we reinvest in our guests, that creates long-term sustainable growth and ultimately long-term shareholder value.